As of July 1st, a new federal tax cut just came into effect. And it's already changing the paychecks for millions of Canadians. I'm a CPA, and you can think of me as your CPA for the people. My job is to make complicated financial and tax topics simple so you can see exactly how this tax cut works, and most importantly, how much money will stay in your pocket. And honestly, I love it when more of my money from my paycheck stays in my pocket. All right, let's dive straight into what's happening. As of July 1st, 2025, a new federal tax cut officially came into effect. The core of this change is a reduction in the lowest personal income tax rate, which is dropping from 15% to 14%. Now, because this change is happening mid-year in 2025, the official tax rate will actually average out for 2025 will be 14.5%. But the important bit is that starting in July, the lower rate, the 14% rate, will be used to calculate your tax deductions starting with that next paycheck in July. And this tax cut applies to the first $57,375 of your taxable income. And because this is a federal tax cut, so it applies to you no matter what province you're in. So what does this change actually mean for your wallet? Well, let's go ahead and calculate the real world impact for the rest of 2025. That first slice of your income will be taxed at 1% lower than it was previously taxed at. Let's look at two simple scenarios so I can show you exactly what that means. The first one is someone who earns $55,000 a year. And since your entire income, if you're earning $55K a year, is under that $57,000 threshold, that means you get the full benefit of the tax cut in your pocket. So if we take your income at $55,000 a year, you apply the 1% tax cut savings, that means you will see a full year tax savings worth $550. What that means for 2025, because it's a mid-year impact, you get half those savings, which translates to $275, but specifically for the 6 months of 2025. And if we further boil that down, that means roughly, if we take the $275 savings over 6 months in 2025, you're about to see $45 of less taxes withheld from your paycheck, and that $45 goes straight into your pocket. So keep an eye on that in your first paycheck starting this July. Now let's look at someone earning $75,000 a year. And this tax cut only applies to the first $57,375 worth of income. So that means a 1% tax cut translates to roughly $574 savings for a full year. So that means for the rest of 2025, you're going to see half the benefit, or roughly $287. And if you're doing the math with me, that means $48 a month of less taxes off your paycheck and goes into your pocket. Now, as a quick bit of caution, you might see different numbers reported out there from different news articles, from different sources, and they may be talking about the full year impact for 2026 as a whole, or for a married couple, or for a family. What I wanted to show you was the direct impact on this tax cut on your next pay stub or the next 6 months and beyond, so you know how much money stays in your pocket. This is just an FYI before you get into those comments and start claiming I'm wrong and I've missed the boat entirely. Many of you are probably wondering, how will I actually see this change? Well, it's quite simple. If you have a job where tax is automatically taken off your paycheck, then in the next pay stub starting in July, you should see slightly more money going into your bank account. And that's because the Canada Revenue Agency, the CRA, they've already updated their source deduction tables, which payroll companies use to calculate payroll. So what you should do, as soon as you get that first paycheck of July, compare to the last one in June. And when you take a look at those two paychecks from June and July, what you should focus on is the federal income tax line. What you should notice on the July one is that there's less federal income tax being taken off your paycheck. So definitely you want to make sure starting in July, you take a look at that next paycheck to see, did you get that 1% reduction in federal income tax? Compare that to your June paycheck. And if you're not seeing that change, if you're not seeing more money going to your bank account, then you definitely want to reach out to your HR department or your payroll department so they can help you out. And what happens if your income isn't subject to automatic payroll deductions? For example, if you are self-employed, well, don't worry at all. You will not miss out on the savings. Instead, you're going to see the tax savings when you file your 2025 taxes next spring in 2026. Now for the most important part of this video, or at least I think it's the most important part, my perspective to you as a CPA. We've already established you're about to see an extra $40, $50 hit your bank account from the savings of this tax cut. Please do not let this extra money just disappear into daily spending. Trust me, do not just let this disappear and just let it fade away. This is found money. This is a perfect opportunity for you to get ahead. Let's make this money work for you, and I'm going to give you 3 powerful options for that to happen. First, if you have high interest debt like credit card, use this money to attack it. An extra $50 a month paid directly to your outstanding credit card balance is what we call a debt snowflake. It might seem small, but trust me, those small, consistent payments can save you hundreds, if not thousands of dollars of interest over time and shorten your path to being debt free. Second, if you don't have high interest debt, or if your high interest debt is already handled, then you are going to automate this found money. What you're going to do is go to your online banking right now and set up an automatic monthly transfer of $50 into your TFSA or your RRSP. This small, consistent investment will grow tax-free or on tax-deferred basis based on if you choose your TFSA or RRSP, and it is going to grow over time thanks to the power of compounding. So yes, go ahead, turn that $50 into $8,000 without even thinking about it. Thirdly, if you don't have an emergency fund, then you are going to use this money to start an emergency fund or grow your emergency fund. Pay yourself first is a golden rule of personal finance. So what you're going to do is set up an automatic transfer of $50 a month straight into your savings account. And what that will translate into over the next 12 months is $600 set aside for unexpected costs, giving you priceless financial peace of mind. Isn't that something that we all want? The key takeaway is this: even a small amount of money used intentionally can have a massive amount of impact. Whether you're killing debt, investing for the future, or building a safety net, making a plan for this extra cash is a single best financial move you can make today. The tax cut is designed to put more money into your pocket, and understanding how it actually works is the first step. Plus, we talked about 3 powerful ways to use this found money. If this explanation gave you a clear plan, the single best way to say thank you is simply hit that like button. It tells YouTube that you found this advice valuable. Plus, it helps other Canadians find this content and hopefully also improve their personal finances. Now, before you go, I have a question for you. How do you plan to use that extra bit of found money? Crush debt, invest for the future, or work on the safety net? Let me know in the comments down below. I would love to hear from you. And yes, I do read every single comment. And if you want more clear financial guidance from your CPA for the people, then all you have to do is hit that subscribe button so you don't miss out on the next one. That's it for now. I'll talk to you in the comments section.